Go ahead.
Thank you, Ms. Lopez. Good morning. This is Judge Aldrich. Welcome to the Office of Tax Appeals. Today's oral hearing for VG Entertainment Incorporated will be live streamed and transcribed. I'm joined by Administrative Law Judges Suzanne Brown and Michael Geary. We three are the panel for this hearing. Also present is our stenographer, Ms. Mosky, who's reporting this hearing verbatim. To ensure that we have an accurate record, we ask that you speak one person at a time and that please speak clearly. If needed, Ms. Mosky will stop the hearing process and ask for clarification. After the hearing, Ms. Mosky will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. Due to COVID-19, the Office of Tax Appeals will be conducting today's hearing electronically with the agreement of the participants. Because these hearings are being conducted electronically, I'd like to offer a few reminders to help the process run as smooth as possible. Please say your name before you speak. This is especially important because some participants may only have an audio connection. And for this reason, the chat feature in Webex has been disabled. Please mute your microphone if you are not actively speaking, so as to avoid feedback and background noise. Please refrain from interrupting the other party. And as a reminder, these proceedings are being broadcast live, and any information shared on the screen is publicly viewable. Likewise, the video of the hearing may be viewed by the public for as long as it is available. Should someone lose connection, the panel members or I may pause the hearing to address the connectivity issue. Once we go on the record, we will confirm the issue and go over exhibits. With that said, are there any questions before we go on the record? Mr. Aparicio?
No questions.
Thank you. This is Judge Aldrich and Respondent's hearing representative. Are there any questions on your end?
No questions.
Thank you. And panel members, could I get a thumbs up if you are ready to proceed? I'm seeing 2 thumbs up. And Ms. Mosky, I'm getting a nod and a thumbs up. Thank you. All right. So we're going to go on the record. This is Judge Aldrich. We're opening the record in VG Entertainment Incorporated before the Office of Tax Appeals, OTA case number 210-37335. Today's date is Thursday, December 16th, 2021, and the time is approximately 10:30. This hearing is noticed for a virtual hearing with the agreement of the parties. Today's hearing is being heard by a panel of 3 administrative law judges. My name is Josh Aldrich. I am the lead judge for purposes of conducting the hearing. At this point, I'd ask that my co-panelists introduce themselves, beginning with Judge Brown.
Good morning, this is Judge Brown.
Mr. Geary, or Judge Geary, you're a little hard to hear.
Is that better?
Yes, thank you. This is Judge Aldrich. During the hearing, the panel members may ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. After the conclusion of the hearing, we 3 will deliberate and decide the issue presented. As a reminder, the Office of Tax Appeals is not a court. It is an independent appeals body. The panel does not engage in ex parte communications with either party. Our opinion will be based off of the party's arguments, the admitted evidence, and the relevant law. And we have read the party submissions, and we're looking forward to hearing the arguments today. For appellant, we have enrolled agent Michael Aparicio. Is there anyone else planning to appear for appellant, Mr. Aparicio?
No, it would just be myself.
Thank you. And for respondent or the department, we have Randy Suazo, Chad Bacchus, and Jason Parker. Is that correct, Mr. Suazo?
That is correct.
Great. And the issue to be decided today, this is Judge Aldrich, is whether appellant has shown that adjustments are warranted to the audited understatement of reported taxable sales. Mr. Aparicio, is that correct?
Yes, that's correct.
Thank you. This is Judge Aldrich. Mr. Suazo, is this correct?
That is correct.
Thank you. So pursuant to our November 17th, 2021 minutes and orders of pre-hearing conference, we admitted appellant's exhibits 1 through 6 and department's exhibits A through E. These exhibits were admitted without objections from either party. Just to confirm, Mr. Aparicio, is this correct?
Yes, that's correct.
And department.
That is correct.
Thank you. Just to give everyone an idea of how this hearing will proceed, we plan for the hearing to proceed as follows. Appellant's opening statement will start there, and that will last for approximately 20 minutes. Next, the department will present a combined opening and closing for approximately 20 minutes, followed by approximately 10 minutes of questioning from the panel. It may go shorter than that, but just as an estimate. And then lastly, we'll have appellant rebuttal or closing, which is we estimated at 5 to 10 minutes. And just to reiterate, these are estimates made for calendaring purposes. If you need additional time, please make the request and we can reassess at the time of the request to see if we can grant you some additional time. Let's see, do either parties have questions before we move to opening statements? Mr. Aparicio?
Nope.
And Mr. Suazo, I saw your head indicating no.
No questions.
All right. So, Mr. Aparicio, we're ready to proceed with your presentation. Please begin when you're ready.
Okay, thank you, Judge. Yes, we would like to begin this hearing here. We do want to show that we do think there is, this does warrant adjustments based on a number of facts that we do have here. So I do want to begin with our first reason here, that we state that the first reason that an alternative method should have never been warranted in the first place. As it is stated on our Exhibit 4, page 3, under section total sales, the CDTFA stated that total sales were reconciled to federal income tax returns. No material differences were noted. Further, POS sales were reconciled with reportable taxable sales and immaterial differences were noted. To us, this shows all records from the CDTFA, all records from the sales tax returns, federal income tax returns, and POS reports were consistent with each other. The CDTFA then states, overall markups per the federal income tax returns were calculated to be around 230% for 2014 and 205% for 2015. And based on those low markup results, further analysis was required and a shelf test was completed. We would like to state that these markups, we don't believe reflect the true markup that should have been reflected on these reports or these analyses that were made. And these markups were not adjusted to reflect cost of goods sold connected with the actual taxable sales. The tax return that includes cost of goods sold in there, and the tax return includes cost of goods sold that includes items that are not connected with the taxable sales. For example, supplies and materials that shouldn't be connected to that. If maybe a deeper dive would have been done and only liquor and alcohol purchases would have been taken into account, the markup percentage is closer to 300 to 365%, which is what we believe is around what industry standard is, but will not have warranted a further analysis. This further analysis led to an expanded shelf test, which greatly overstated the markup and the underreporting of sales. I would like to wrap up our first point. Our second reason being here, that the CDTFA was suspected by their own auditor, the original auditor, that they use methods of assumption and speculation when assessing percentages and ratios, or in our case, markup percentages. If you refer to Exhibit 3, that is the email from our original auditor, Ms. Catherine Kim. Please note, Ms. Catherine Kim was our initial auditor that presented an initial audit report in the amount of $12,000, based on methods that were not speculative in nature and solely factual. Please refer to Exhibit 1, page 2. Ms. Catherine Kim's manager, so the $12,000 tax liability is reflected in Exhibit 1, page 2. Ms. Catherine Kim's manager did not accept this audit and subsequently led to a second audit, which resulted in a tax liability of $155,000. We did not agree to this, and this resulted to a third audit report that resulted in a liability of $85,000. See, And this is, you could refer to this on Exhibit 4, page 1. The wide range of audit results makes us question the validity, accuracy, and the reasonableness of the audit. According to the CDTFA's Field Audit Manual, Chapter 8, when a markup analysis indicates that there were underreported sales during the audit period, a reasonable evaluation must be performed to support the audit findings. The auditor should make specific comments regarding the reasonableness of the audited figures to explain and reinforce the proposed audit assessment. Please note, no reasonableness explanation was provided to us to explain or reinforce the proposed audit assessment. In our opinion, 300,000 in sales per year of underreporting is not reasonable, considering the sales tax return, federal income tax returns, and POS reports were all in accordance with each other. Let's see here. And our third point, we would like to indicate that the accuracy of the most recent audit does not, the accuracy of the most recent audit we feel to be not accurate. As you can see on Exhibit 4, page 19, the liquor shelf test done for well drinks is severely skewed to reflect a markup of 2,238%. This shelf test fails to include prices for all types of well drinks served. This shelf test only includes vodka and tequila and fails to include other liquors, for example, rum, whiskey, gin, etc. If the lowest prices of these different liquors were included in this shelf test, this would severely bring down the overall markup of the shelf test. And we did bring this up during the appeals conference, and a new shelf test was requested by the appeals conference auditor, Ms. Cindy Feng, on July 28, 2020. After multiple extensions that were requested, Mr. Nalan Samawit-Rema responded on October 8, 2020 that the department would not be doing a new shelf test because it is not recommended. Please see Exhibit 6 for our email thread in regards to this issue. In conclusion, due to the fact we believe an alternative method should have been used, also that the alternative methods lack completeness and accuracy, we feel that the liability for this audit should reflect only the differences between the sales tax returns and the POS returns and the federal income tax returns, which result in a liability closer to $12,000, which is a lot more reasonable. This is due to an inadvertent oversight and not done on purpose. That will wrap up our presentation. Thank you so much.
Thank you, Mr. Aparicio. I'm going to reserve questions for after the department's combined statement. Mr. Suazo, are you ready to proceed with your combined opening and closing?
Yes, sir.
Please proceed when you're ready.
Okay. The appellant is a corporation that operates a full-service bar on the bottom floor of an upscale hotel in downtown Los Angeles. The bar serves liquor, beer, wine, food, and cigarettes. All sales are reported as taxable. Records provided were federal income tax returns for 2014 and 2015. General ledger profit or loss statements for 2014, 2015, and 2016. Aloha point of sales POS reports for 2014 through 2016. Purchase registers on Excel for 2014, 2015, and 2016. Purchase invoices for the audit period, as well as April and May 2017 purchase invoices. Comparison of federal income tax returns, recorded sales to sales and use tax returns, reported sales for 2014 and 2015. Discloses minimal differences. Exhibit D, page 82. Review of the federal income tax returns shows that the appellant claimed net income losses for both years, and no compensation to the officers was paid. Comparison of sales and use tax returns, reported sales to federal income tax returns, cost of goods sold for 2014 and 2015 disclosed markups of only 230% for 2014 and 205% for 2015. Based on this type of business, the markups were considered very low. Exhibit D, page 81. Comparison of appellant's merchant credit card statements to POS gross credit card amounts disclosed minimal differences. Exhibit D, page 80. A sales tax reconciliation was conducted. Sales tax collected per the appellant's POS system was compared to sales tax reported, and a difference of over $4,000 in sales tax was discovered. Exhibit D, page 75. Mandatory tips listed as auto gratuities on the appellant's POS system reports were not taxed. Monthly amounts were scheduled, and total assessment for this area amounted to over $72,000 in taxable measure. Exhibit D, pages 72 and 73. Self-consumption was estimated based on 2% of purchases of cigarettes, liquor, beer, and wine. The taxable self-consumption amounts to just under $8,000 for the audit period. Exhibit D, page 71. As previously stated, the company operated at a loss for 2014 and 2015. No compensation to the officers was paid, and the recorded markups were considered low for the business. Based on these factors, the department deemed that further examination of the appellant's records was necessary to ensure the accuracy of the reported sales. A markup procedure was used to validate the reported sales amounts. A purchase segregation was performed for October 2014 and May 2016. Exhibit D, page 70. The purchases are segregated into the following categories: well liquor, call liquor, premium liquor, domestic bottled beer, premium bottled beer, domestic draft beer, premium draft beer, wine, and supply items. Weighted percentages for each category were computed. Shelf test was conducted on the aforementioned categories using purchase invoices provided by the appellant for April and May 2017. The appellant's detailed pricing listing, Exhibit E, pages 146 to 149. Combined well, call, and premium drink markup for liquor was adjusted for happy hour and regular pricing, cocktail and non-cocktail pour sizes, and a 12% spillage allowance. Exhibit D, pages 36 to 40. Beer markups were adjusted for regular and happy hour pricing, a 1% breakage allowance for bottled beer, and spillage allowance of 10% for draft beer. Exhibit D, pages 41 to 43. Wine markups were also adjusted for happy hour and regular pricing, along with 6% allowance for spillage. Exhibit D, page 44. The shelf test markups were applied to the weighted purchase percentages of the segregation test to calculate an overall weighted markup of 556.77% on alcohol beverages. Exhibit D, page 35. A water bottle shelf test was also conducted. Exhibit D, page 45. Page 45. Excuse me, the weighted alcohol beverage markup is Exhibit D, page 35. Because no records were provided to conduct a shelf test, cigarettes and food markups were estimated at 50% and 200% respectively, and were used on those categories. Exhibit D, page 33. The appellant's recorded purchases of cigarettes, food, water, and alcohol were used in the markup process. Exhibit D, page 46. Each category's purchase amounts were reduced by 2% for self-consumption and 2% for pilferage. Alcohol purchases were reduced by an additional 3.77% for mixes and supply items. The adjusted purchases were then applied to markup factors that were obtained from the shelf test. Exhibit D, page 33. The resulting computation disclosed sales for the period from January 1st, 2014 through December 31st, 2016 of $2.7 million. When compared to the reported taxable sales, the same period of $1.8 million, a total difference of over $900,000 was noted. Percentages of error were computed for each year. Percentages of error were then applied to reported sales for the applicable periods. For first quarter 2017, the 22.37% percentage of error noted in 2016 was applied. The resulting unreported sales for the audit period totaled $853,208, Exhibit D, page 32. Analysis of the audited sales in comparison with the credit card sales for 2014, 2015, and 2016, which is on Exhibit D, page 74, disclosed that the cash to credit card ratio is almost 50%, which would be deemed reasonable for a bar. To recap, the total audit assessment of $933,695 consists of unreported sales of $853,208. In addition, unreported taxable mandatory tips of $72,500 and taxable self-consumption of $7,987. The sales tax reconciliation difference of $4,000 in tax was not assessed as it was considered included in the markup process. The appellant disagrees with the use of the markup procedure used by the department. The appellant contends that the recorded sales should be used to determine the accuracy of the reported amounts on the sales and use tax returns. The department contends that based on the information that came into its possession, the reported sales amounts on the sales and use tax returns for the audit period were incorrect. The department used the appellant's purchase reports to determine cost of goods sold. The department used the appellant's purchase invoices and appellant's pricing list to conduct the shelf test. The department used the appellant's estimate to determine percentage of cocktail drinks sold. The department used the appellant's sales reports to determine the sales percentages for pricing drinks between discounted happy hour prices and regular selling prices. The assumption on the markup of food is based on the industry average and was considered appropriate when discussed with the appellant. The markup on cigarettes was also considered appropriate when discussed with the appellant. The appellant has had time to review the testing procedures, and corrections were made when the appellant provided documentation to support the contention. Revenue and Taxation Code 7054 authorizes the department to examine books, papers, records, and equipment of any person selling tangible personal property, and the department may investigate the character of the business to verify the accuracy of any return made. Moreover, Revenue and Taxation Section 6481 states that if the department is not satisfied with the return or returns of the tax or the amount of tax or other amount required to be paid to the state by any person, it may compute and determine the amount required to be paid upon the basis of the facts contained in the return or returns, or upon basis of any information within its possession or that may come into its possession. Over the past 70 years, California courts have upheld the department's right to investigate beyond the taxpayer's books and records to calculate tax deficiency. In Maganini versus Quinn, the court held sections 6481 and 7054 contemplate an examination behind the books in which original records such as purchase invoices, sales slips, cash register tapes, and inventory records may be audited and analyzed. Similarly, in Riley Bees versus BOE, the court reaffirmed the holding in Maganini, even when a taxpayer's books and records are comprehensive and in agreement with each other. The court in Maganini also found that where the department has established that its determination is reasonable, the burden of proof shifts to the taxpayer to explain any disparity between the taxpayer's books and records and the results of the audit determination. Here, the department examined books and records, and even though it found them to be complete and in agreement, the department was within its rights under sections 7054 and 6481 to examine behind the books. Accordingly, the department's use of an alternative method to compute and determine the taxable sales and the applicable sales tax that should have been reported for the audit period was reasonable. The appellant contends that the initial audit findings provided by the prior auditor should be used as a basis for the audit assessment. The primary purpose of the department's audit program is to provide reasonable assurance that taxpayers pay neither more nor less than required by law. in Audit Manual 402.10. Therefore, the department is required to correct its audit methodology during the course of the audit if it determines that more accurate information is available and/or it finds that its previous conclusions are incorrect. Therefore, the initial findings do not preclude the department from later revising the findings when the department reviews the documentation and concludes that a different audit method, in this case, the markup method, was the most appropriate method based on the available records. The department has shown that its determination was reasonable and the appellant has not provided sufficient evidence or other documentation to prove otherwise. This concludes my presentation. I'm available to answer any questions you may have.
This is Judge Aldrich. Thank you, Mr. Swasso. At this point, I'm going to refer to my panel, see if they have any questions for either of the parties. Judge Brown, do you have any questions?
This is Judge Brown. Not at this time.
Okay. And Judge Geary?
I do have a few questions. Thank you. For appellant's representative, does the appellant still concede the measures for self-consumption and for mandatory gratuities?
Yes, yes, we do.
Is there any of the audited measure for unreported sales that the appellant concedes? Does the appellant concede that some additional amount is due for unreported taxable sales?
No, we do not agree with that.
Does the appellant agree that the cost data that was relied upon by respondent in conducting the audit was accurate?
No, we do not.
And will I find somewhere in the evidence submitted cost data that appellant concedes or that appellant contends is accurate?
I'm sorry, with the evidence that was submitted by both parties, will you be able to, I'm sorry, I'm just trying to understand the question.
Let me rephrase it, see if I can help. The department has, the respondent has submitted in its evidence, and it may be in your evidence also, the cost data that it relied upon for its shelf test.
Yeah.
And has argued that that cost data came from appellant. You, your client indicated just a moment ago, you indicated on behalf of your client that appellant does not agree with that cost data. Will I find in your submission or in the department's submission different cost data that appellant contends is accurate?
The cost will be the same. We did go off the same data. It's just maybe the segregation between the well, the call, and the premium that we do not agree with. And that's where we had an issue. But the cost data and all that is correct. The way maybe it was segregated, we do not agree with that.
Okay, then let me ask you about segregation. Will I find somewhere in the evidence the segregation that appellant contends should have been used?
We just noted that, you know, the lowest price of those specific liquors, the gin, the whiskey, that should have been allocated towards the well. That is our position there. So yeah, those liquors are included in those cost prices. Did we conduct a new segregation? No, we did not.
Do you agree, or does the appellant agree with the estimated markup that respondent used for cigarettes, which was 50%, and 200% for food?
Yes, that's fine.
And does the appellant agree with the shelf test that the department or the appellant conducted concerning the sale of water at $2 per half liter?
Yes.
How about what about the purchase ratios that respondent describes in its audit work papers? Does appellant agree with those purchase ratios?
Yes, those purchase ratios were.
Maybe I can shortcut this. Is the only point of disagreement between that the appellant has with the audit relate to the pricing of well versus premium?
That is one contention. I do know that the department argued that, these various tax codes 7054, some of these court rulings, Riley v. versus the state, does allow for these alternative methods to be used. We just, want to note that the department did state that because the cost of goods sold was deemed to be too low, this is why they went towards this alternative method. We just want to contend that the cost of goods sold analysis that they did initially is incorrect, does not reflect a true markup. They have a markup of around 200. Our analysis are based on the federal income tax returns, we're closer to 300 to 365%. And maybe if that would have been conducted in the beginning, a second, a further analysis would have not needed to be done. That is what we contend as well. But yeah, I do understand that the department does have the ability to do other methods as long as the data is available.
Thank you. And those are all the questions that I have.
This is Judge Aldrich. Mr. Aparicio, would you like to present a closing argument or a rebuttal or otherwise address arguments made by the department?
Yeah, sure. I will do a closing argument.
Okay, please proceed when you're ready.
Yes, in closing, we would just like to state here that the department on their most recent audit, exhibit 4, page 3, they do state that because of the low cost of goods sold is why they went to go do a further analysis. We just want to contend that the further analysis may not have needed to be done. Our records were complete, and they were cohesive with each other in terms of federal income tax return, the sales tax return, and the POS reports. Maybe if that would have been recognized from the beginning, this alternative method would not have been done. We do not agree that the underreported sales of around 850,000 for 3 years is reasonable at all. It is more reasonable that it's maybe around what the initial differences are of 12,000 of a sales tax liability. And yeah, we just also do want to put on record that their own auditor does question their methodologies of their audits. Also, that a reasonableness explanation was not given to us per their field audit manual. That does need to be given to us when a markup analysis is done, and that was never given to us. So we contend that this is not reasonable. It's severely overstated and based on mistakes from the cost of goods analysis, and also no reasonableness explanation was given to us. That'll be it. Thank you so much.
Thank you, Mr. Aparicio. This is Judge Aldrich. I'm going to ask my co-panelists one more time if they have any questions before we conclude. Judge Brown, did you have any questions?
I do not. This is Judge Brown. I do not.
You do not?
I do not have any questions. Thank you.
Okay. And Judge Geary?
No, I do not think.
Thank you. Thank you, everyone, for your time and for being flexible with the hearing format. We're ready to conclude the hearing. The record is now closed. The panel will meet and decide the case based off the evidence and arguments presented today. We will send both parties a written decision no later than 100 days from today. And while this hearing has concluded, there are more hearings for today. The hearing calendar will resume at 1 p.m. Thank you.
Thank you.
Thank you.
Thank you.